once again and welcome back to our money conversations. Remember that we are going to be talking personal, business and chama finance every month. So we shall be having these conversations with our lead expert, our lead financial expert, Mr. Joseph Kanani. I am telling you, the Mamlaka team here and I have been amused at what we're actually learning. So if you're in a hustle, if you're building a hustle, or if you want to get out of, even something as small as very small debt like Fuliza na hizi maneno za hustler fund, it's important for you to be able to know, how do I save the money that I collect from my business or even from my income and now be able to invest. And when you invest this money, you're able now to live a very comfortable life. So karibu sana Bwana Joseph Kanani.
Thank you.
And remember, these money conversations are brought to you by Ufalme Wetu and the Habu Deco. So karibu sana Joseph.
Thank you so much. Mm-hmm. Thank you for this platform, and I am hoping we are impacting on the lives of many.
Maybe you have impacted. There are things I do too. This feels like it's a whole class that somebody should actually plug in and pay. Thank you for that.
Yeah. Asante sana.
So today we shall be talking about after tumesave from episode 3 now into episode 4. How do we start investing? Where do we invest? Sasa tueleze.
Sawa.
Yeah.
So asante tena. Now, traditionally, kila mtu amesikia nyanya zetu walikuwa wanaweka pesa chini ya mattress. Na it's a good way of saving. Yeah. The only problem is in accounting terms or in economics, there's something we call time value for money. Time value for money means that the power of money today will not be the same in a year's time.
Exactly.
Over time, because of things like inflation, interest rates, or other factors considered, the purchasing power changes. Such that ukiwa na 1,000 leo, let's say you're able to buy 10 loaves of bread. So each loaf, so the purchasing power of 1,000 shillings is 10 loaves. But in 1 year's time, if bread will be worth 200 shillings, so it means the purchasing power of 1,000, it may change from 10 to 5 loaves.
It is true.
So, ukiwa na deni yangu ya 1,000 shillings, and you pay me 1 year later, and you pay me the same 1,000 shillings, you've short-changed me. You should pay me
with an interest,
or the equivalent of its purchasing power.
At now the moment I paid.
So instead of paying me with 1,000 shillings, pay me with 10 loaves. Because I gave you my money when it was what? 10 loaves of bread.
Or 10 loaves of bread.
Yeah. So in 1 year time, pay me my money
in now the
10 loaves of bread. So if one loaf is 200 shillings, you pay me 2,000. That is what we call the time value of money. Na hiyo ndio shida ya kuweka pesa chini ya mattress. Kwa sababu hiyo pesa ukiweka ikiwa 1,000 shillings, ukitoa 1 year later bado itakuwa
1,000 shillings.
1,000 shillings. Na itakuwa lose its purchasing value. So if you're saving for the sake of putting the money aside, then you're losing. So basically you can't really save money without investing. So the practical sequence of saving is to invest.
The practical sequence. After you have saved, invest.
But if you save, alafu unaweka chini ya mattress, hakuna kitu unafanya. You better have consumed that money then.
Unaenda ukule pizza kama ule previous episode.
Or if you saving it to just consume it at a later date. No, that is not saving. Just delaying consumption. That you were supposed to eat pizzas today, but unaona hata tu nizikule next month.
Interesting.
So the practical thing, or the accepted sequence is save, then invest. Investing now helps your money to have an purchasing power equal or more than what it was 1 year ago. That if I invest this 1,000 shillings that I'm saving, in 1 year time, that money will be able to buy me those 10 loaves of bread, kwa sababu itakuwa imezaa. And people invest in so many ways. Now, the easiest or the commonest way people use savings to do is to start what we call side hustles, or basically businesses that are not your main source of income.
Exactly.
So you're trying to have an extra source of income. You call it a side hustle. And if you ask people around, they'll give you so many ideas. Like if you call 10 people here and ask them, what idea do you have for a business? Then I can promise you, like most of them will give you the same answers. Because the ideas that you have for side hustles, I'm not saying that they are bad, but correct me if I'm wrong, people tell you about kinyosis and salads. They tell you about wines and spirits. They tell you about boutiques. They tell you about spare shops. They tell you about the common things that everyone is thinking about. Tumba. They tell you, so I'm not saying that those are wrong, but I'm saying if you put your money where there is no demand, you have done that because you think it's a good idea. But since it's being done by everyone else, it means the market is saturated.
True.
You're going to compete for customers. You're going to lose the money that you had painfully saved. You're going to think side hustle are bad.
True.
So what we advise is, before you do a side hustle, first invest in yourself with a skill that you can use to do that side hustle.
Exactly. Now,
in this age of the internet, we have free schools. There's what you call the University of YouTube. Like if you want to learn anything nowadays, you just have to search.
Exactly. True.
And you'll find not one but many people teaching you how to do that.
Exactly. True.
So learn a skill first. If it's graphic designing, learn that skill.
True.
If it is coding, invest in yourself, learn that skill. If it is video production, audio production, creating adverts, there's so many skills that you can learn that can help you now start a side hustle that will actually earn you money. Because you see, when you went and started a kinyozi, you never invested in yourself first. You never studied how the market was.
Exactly.
You never studied, like if they
maybe they didn't even do any research.
They never did any research. The only research they did was how much to rent the house, how much to buy the equipment, how much to, and what we say in accounting, you should never recognize an income until you've actually received it.
Wow.
And most people, what they do, they have these figures that are very nice. Kila siku nitakuwa nikinyoa watu 200 at 100 shillings.
So niko na 2K?
2K or whatever amount. You see, that in accounting terms, uko na zero until you have actually received
made your 2,000.
So these figures on books, they look so nice.
Until you hit kwa ground.
Upate kumbe, you walk around your estate. Every 2, 3, 4 shops, you'll find a kinyozi there. All the business that you wanted to start. Every 3, 4 shops, you'll find a serious shop. Every 2, 3 shops, you'll find a boutique. Because that is what everyone is thinking about. Because they didn't invest in themselves to get the knowledge, to understand maybe a side hustle that is actually uncommon.
Like what gap can I fill?
Exactly. What problem can I solve?
Exactly.
Yes.
True.
So that's how I would. That's the first investing stage. Invest in knowledge. Invest in yourself. After you've learned that thing, now go and do it. And now investing in whatever you're doing. Like if you want to buy a laptop, now you can buy it and start what you're doing. If you have invested in yourself and you have learned about the boutiques and the salons, and if that is what you're good at and you're sure you're not going there to try, then go ahead.
I think even passion is important when somebody is thinking, how do I invest this 100K I've been able to save from like what we say there into something that I know, even though you close it in one location, because you can open a shop and maybe there's a lot of competition in that area.
Yes.
You would still be able to move your business location, go to another unsaturated location for you to be able to now continue doing the same thing, such that if you had bought equipment for cake baking, you're not going to have to now sell them at a throwaway price for you to be able to invest in another business. I think it's also important, passion, when you're thinking skill, side hustle, where do I go?
Yeah, and it's good that you mentioned passion, because passion is very important, but passion with knowledge now becomes something very strong. Yeah?
Very true.
And people have this problem we call the shining object syndrome. The shining object syndrome is, I don't know whether you remember the quails business. Where people come and tell you that there's this idea, it gives you so much money, do it, you'll become rich.
And you go to the bank, withdraw your savings and put it in something you don't even understand.
People, there was the Bitcoin's craze again. It's called a shining object syndrome. The people find something that is shiny and they all want to run to it without having any knowledge and everything. But as you're saying, passion will help you. Like if you're in the cake industry, that is your passion. So you'll find knowledge about it, you'll be persistent even when you fail the first time, and you'll maybe continue trying until you get it right.
It is true.
But if you're doing something you're not passionate about, the moment you fail once, and it's also important to put it across right now that when you're starting a side hustle, in the first year, the chances of failing are higher than the chances of succeeding.
In the first year.
In the first year. In fact, statistics say that out of 8 out of 10 businesses that are started fail within the first year. And that is because people do not have adequate knowledge or skills to run those businesses or side hustles. And someone said once that the problem is not ideas. Walk out anywhere, ask people about what ideas they have. You'll find very immaculate, very beautiful ideas. But the skills to make those ideas work, people lack them because they don't invest
in the knowledge and skill acquisition for that.
Then the second way of saving is now investing in what we'd call risk-free investments. Because or less risky. Let's call them
less risky.
Yes, because we say the role of investment is basically to turn your money from 1,000 to 1,000 and something at the end of a certain period of time. And one of the places people invest is in banks. Like people put their money in banks and wait for it to grow. But not that I have any bank in mind as I'm saying this, but that if you have money that you want to invest to earn money, the worst place that you could invest is in a bank. Because it has the lowest interest rate compared to other investing solutions. Remember, a bank's business is to get your deposits and lend out your deposits to people. And then whatever interest they earn, then they pay you a small part of that interest. In most cases, if you do a fixed deposit with most banks in Kenya, the highest you might get is 6%. That is the highest you might get in a year. But when you borrow the same money, it will be the lowest you might get. It's maybe 17 or 18%.
This is true.
But there are other options, like people now should learn about things like mutual funds, government infrastructure bonds, or even corporate bonds. Basically what this is, maybe I can explain. When the government wants to raise money, one way we say it was through taxes. And we talked about taxes.
We did, yes.
But the other way is through internal borrowing. The government actually borrows money from us, but through bonds.
Our money,
bonds, yes. So what the government does is, if it wants, let's say, a certain amount of money, let's say 1 billion shillings, so it will go to the market. So the market is the securities market, and say that we want to raise 1 billion shillings. But this 1 billion shillings is divided into units of 100,000. So if you want to buy, you have to buy it in portions of 100,000. Like you want to buy 2 bonds. So each bond is worth 100,000. So it means you're lending the government 200,000 shillings. But now the government has high interest rates. Like from the recent statistics, about 12% to 12.5%.
Which is bigger now than
the banks. Banks, it's like double what the banks would give. So that is a very good option
for investing.
That you have a certain amount of money that you don't want to start a side hustle because it's too risky, or you don't have time to invest in knowledge. So you take that amount of money, you put it in the government bonds. At the end of the year, it will have earned 12.5%.
Interesting.
But now it happens that not many people have 100,000 shillings lying around. That even if you wanted to go and buy a full bond, you can't be able to afford the price of one bond. So what they do, they have what we call mutual funds. A mutual fund is now a product by most insurance companies or most financial institutions, like Old Mutual, whereby they take funds from maybe 10 people. Let's say there are 10 people who have 10,000 shillings. So the 10 people contribute 100,000. They take it to Old Mutual. So now Old Mutual now buys the bond from the government as if it belongs to the Old Mutual. Then when it earns the interest, it is given out to these other people.
Wow. Nice.
So there are those options: the mutual, the bonds, the mutual bonds. And then there are people who, if you have knowledge about the stock exchange, there are people who buy now stocks or company shares. Well, the company is listed in the stock exchange with 2 aims. One, to get dividends. Dividends is the return from the share that you buy. Or 2, to sell the share when it reaches a higher price than how much you bought it. With what is called a capital gain. So, but that would mean that you have also to be very speculative. That is, you have to keep on monitoring the market, when the prices are up or when they are supposed to go up, so that you can buy or sell, or wait until the end of the year, get your dividend. So again, the media, especially the newspapers, you'll find pages where they give details on how much shares are costing, how much dividends they are paying, how much you require to invest, etc. Then the other way maybe to invest, and this comes to the question you asked about a parent who has a child, and that child will go to school at maybe 18 or Form 1 at 14. Now this is where now the insurance companies have products like the life insurance, where you invest a small amount of money every month, like 2,000 shillings, 3,000 shillings, or according to how much you're capable of. So that at the end of the period, maybe the 12 years or the 18 years, you're able to get that amount lump sum plus interest. Because if you had put it in the mattress, you'd get it just the way you put it. But if you put it in, because what these companies do, they get your money, then they go and invest in other things. Then when they invest in those things and they earn an interest, then they come back and pay you.
Wow, nice. So those are the 4,
No, those are the basic.
The basic ways of investing.
Wow. But maybe
Mm-hmm.
it's also important maybe to talk about ways you should not invest in.
You should
mention that. Because one of the ways we have already talked about is on the shining objects.
Usikimbilie kweli business tena.
Usikimbilie kweli, usikimbilie bitcoins without understanding it. Usikimbilie. And it doesn't have to be at that level. It also comes this way. A friend will come to you and tell you, kuna hii deal nimepata, sijui ukiwekelea, sijui nini.
People lose money.
Within a few days, down. And people are gullible. I mean, the language of money makes people soften. Exactly. Even the otherwise hard people. Ukiwaambia ti pesa ita double in a few days, watakubali. I remember there was a person some years back, and he used to tell people, if you invest 375,000 in a greenhouse, after 6 months you will be paid. After every 6 months, you'll be paid 250,000 shillings.
Was that story? It was in the media?
Yes, it's something public. That's what I'm saying.
Yes, let's not mention names.
No, but it's something public. Someone has gone through the court, so it's not like
we would be breaking any law.
So you can find that out. So people, and they actually managed to pay a few people, but that was just a trap. It's how the pyramids work. You get money from the people at the top to pay the people at the bottom. Then when you've gotten enough money, the whole thing collapses. So avoid those shiny objects at all costs. When a friend tells you there's a deal, remember the old saying, it was not said for nothing. When the deal is too good,
think twice.
Even twice nowadays.
And investigate, you know. The beauty of now, the age we actually living in, we have lots of this information in our fingertips. You know? Yeah.
And also that point that she has brought up, the accessibility of this information is so high that people are now giving out wrong information, but in a very sweet way. That you can look at us and think, oh, since we're just talking and no skits or music here, maybe it's boring to you. And someone else will come and give you very wrong information.
With the skits and whatever.
And good language and tell you, you stand to win this amount of money. But when the deal is too good, remember you're the product and they're getting something from you.
Exactly.
Yeah. So
and you will be the victim of whatever happens.
Yes. Exactly.
Incredibly.
Yeah.
Wow.
So I think
that's it. So anyway, remember this show, our money conversations, personal, business, and chama finance, are brought to you by Ufalme Wetu. I will let Mr. Kanani also now mention about Ufalme Wetu kidogo in a minute.
Okay, thank you so much. So you visit us at www.ufalmewetu.com. You'll find our platform there. So one thing that will encourage is saving, and as we have discussed in previous episodes, it's saving slowly and in a disciplined way. And then we encourage what we call peer banking. That is, we've discussed about banks, but shortly here, where we say banks borrow your money, they lend out at high interest rates, but they keep all the interest. So in our platform, there is what we call peer banking, where you're able to bank on yourselves and the interest, and keep the interest, that the interest becomes yours. And there are so many other foundations like getting the right skills, guiding you towards your entrepreneurship journey, etc.
Wow. Thank you so much. Our other partner is the Habu Deco. The Habu Deco is a premier furnishing solutions company. By furnishing, we mean the curtains that you need, the sofas that you need, the carpets that you need, the lighting that you need, the office fittings that you need. This could be the roller blinds, the vertical blinds, and many other areas of solutions that we offer for homes, for hotels, and for offices. So this has been episode 4 on this journey that we have begun on personal, business, and chama finance. On Hustle Zetu, we want to learn how to be able to, after tumechapa hustle, how do we now manage our money, multiply our money, invest it where and why. These conversations are very important, such that we are able to win, and by winning, we win together. We hope that you have learned something. I have learned so much. There are things I didn't know. If I met Mr. Joseph Kanani 10 years ago, I am sure I would not be where I am right now. And it is very important that we pick this knowledge and information for us to be able to say 10 years from now, 20 years from now, we are better financially, and even freedom, financial freedom is something that we can be able to brag about and talk about after some time. So thank you very much for following this conversation. Kwaheri, and keep watching our money conversations.
See you later.
Bye bye. bye.